Thanks for coming out this afternoon to listen to the story of Gran Colombia. It's an exciting time for us in Gran Colombia, so let me get to it and make up some time. We're the largest golden producer in Colombia. Over the last 10 years, we're now celebrating our 10th anniversary this year. We've produced over 1.3 million ounces of gold, and over 85% of that has come from our cornerstone high-grade Segovia operations. The balance has come from our Marmato project, which I'll also speak to today. We're listed on the TSX and the OTCQX, the TSX being our primary exchange, 61 million shares outstanding at the moment, and if you take into account warrants, options, and our converts, we're at about 89 million fully diluted. What's been nice about this story over the last little while to talk about is that we've really made a transformation of our market cap and our shareholder base over the last few years with the performance that we've had in turning the operations around, and more recently spurred by the what we saw as an uptick in gold, generally from about a year ago. Recently, we've been named in a couple of studies as one of the top 5 performing companies with a 3-year return. Last year, the TSX and the inaugural TSX 30 recognized our 3-year share performance. We've actually seen our shares go up by about 300% over the last 3 years. Since January 2016, when we restructured our debt and got moving with our turnaround story, we had a $6 million market cap. As of last night, it was around $408 million. And just over the last year, our shares are up 52%. So all in all, for us, everything's moving in the right direction, but we're not yet at the full analyst targets for our shares, which range between $8 and $10. And what's really driven that is continuous improvement in our operations, backed by our high-grade Segovia operations. Last year, we set another record with 240,000 ounces of gold from our 2 projects, 214,000 ounces coming from Segovia. That was up 10% from the year before. And the reason we've been focusing on Segovia, it is recognized as one of the top 5 highest grade underground gold operations globally. We did a couple of years at 17 grams. Last year was 16.4. We're looking this year somewhere between sort of 14, 15 on average based on the resource model. And we've had some good results already in the first month of the year at 14.7. And what excites us about Segovia is it's not a large title. It's 3,000 hectares of private property dating back over 150 years. Average grade up until we bought the project over those years was about 12 grams a ton, and since then we've been doing an average of about 15. But within this project, there's 27 known veins with historical mines, and we're currently only operating the 3 that were in production at the time we bought the title, the El Silencio, Providencia, and Sandra K. Up until this year, we've not been in a position to do any kind of regional exploration. Cash flow constraints, turning things around, focusing on the 3 mines to not only build the inaugural mineral resource, but 2 years ago to qualify our first ever reserve of about 700,000 ounces, which at this point is about a 3.5-year reserve life. But the cash flow generation coming out of the company and last year's free cash flow, ballpark right now, we haven't released our year end, is probably about $60 million US. Gives us a very strong balance sheet, and this year we're actually going to move out and start to do a regional program. We've got 45,000 meters planned, 30,000 of that in around the 3 mines, continuing to do extensions and deep drilling, and we're going to target 15,000 meters of drilling as we move outside those 3, looking for the next mines within this title that'll continue to add to mine life as well as upgrade the reserves. And we've set a task for ourselves not only to replace, which I think is what we'll do again this year, but to eventually get ourselves up to about 1 million ounces of reserve. Core for us in trying to do this has been mechanization of these old Segovia mines, introducing equipment and mechanized mining processes in the new areas that we're doing, as well as training our workforce, which means we've also trained now some of the first women in Colombia to operate the heavy equipment underground. Improving efficiency by putting in personnel skips so we can reduce the amount of time that employees are spending getting from surface down to the stopes at the lower parts of the mine so that we can increase production, which we've been doing. Improving our health and safety footprint. It's been a cornerstone for us since we embarked on this in 2016, and we've dramatically improved the safety track record at all 3 mines. And focused on our social license to operate, which comes in a number of different ways, but one core is by including the artisanal miners that are working within our title and small mines in our mining model by allowing them to stay, but doing so under an operating contract with us, which means that they operate the mines responsibly, both from a health and safety as well as an environmental standpoint. We formalize them into cooperatives, we turn them into legal miners, and one of the biggest environmental impacts, and this slide's a little old, it says we've eliminated over 50 tons of mercury. That number now is up closer to 90 tons of mercury that would otherwise have gone into the environment through illegal processing. It's also turned about 2,500 illegal miners into legal miners that now qualify for social benefits for them and their families. Last year we completed an expansion of our mill. It's now up to 1,500 tons a day. It's 90% recovery. I looked at the mill again last month when I was down, and probably the thing that caught my eye the most was the new tailing storage facility named El Chocho that we've built about 1.5 kilometers away from the plant. We're sending the tailings through there by pipe. They're going to a filter press that we commissioned last year. We're dry stacking the tailings, and 10 years from now, when it's exhausted, it's going to turn into parkland and other use for the community. So it's a dramatic change from how things used to happen in the title to improve our environmental footprint. And this is a picture of El Chocho. You can just start to see at the upper side of it where it's brown. That's actually the early stage of it that'll soon be turned into the first set of parkland that we can turn to the community. But over time, this will all get filled in. You can see the filter press. You can see the brown water that represents sort of what's going in through the process, and the clear water that's coming out. That clear water is being fed back to the plant, so we're continuously cycling this water through and getting use of it. We've also been rehabilitating all of the old tailing storage facilities. We've been planting about 3 trees for every one that had ever been taken out. So reforestation, especially in Segovia where it gets a lot of rainfall, is something that happens very quickly. And the other part of our ESG program, and I should mention an ESG because it is much more aware of these days. Gran Colombia recently created an ESG committee of the board to bring the top level focus on what we want to do. We have a lot of great programs going on. We don't necessarily do enough justice to explaining what they are. We've hired a manager of corporate sustainability as well. We'll be bringing that story more to life over the next number of months, but education has been a key part of our social programs. We have a private school there where over 600 kids go to school. We've just recently opened a new high school. Another 500 kids are now going to be able to go to high school in the community, and that's a key part of what our sustainability is. Results always speak for themselves when we put up the charts. We've increased production over the last more than 3 years, 5 years. We're up at over 200,000. The solid turnaround with our focus on controlling our costs. Our all-in cost is around $900 at the moment. Our EBITDA was $130 million trailing 12 months at the end of September. By the end of the year, it'll be a little higher than that, given we had a strong fourth quarter and gold prices were better than the fourth quarter of the year before. And we're free cash flowing, about $60 million, as I said, my estimate for this year. So that's allowed us to strengthen our balance sheet. At the end of the year, we reported we had $84 million of cash and we had $84 million of debt. About $69 million of that was our gold notes. We've already announced that with a private placement we completed in February, we're going to retire 30% of those gold notes early at the end of March. So come the end of March, we'll have north of $84 million in cash, and we'll have about half the debt we had at the end of the year. Our gold notes are unique, at least to us. They're a note backed by production, so we are setting aside production every month. We're monetizing that every 3 months and paying out the proceeds to the holders. The first $12.50 an ounce of the sales proceeds amortizes the debt. You get a gold kicker return increment on the balance. So at current prices, there's $300 to $400 an ounce of kicker being paid out, and that's on top of an 8.25% coupon. So it's been a very healthy piece of paper and very well received. And with the retirement of 30% of that debt at the end of March, our future debt schedule decreases by 30%. So we'll be putting some more cash back into our balance sheet from that debt repayment. And the last thing I want to talk about, today's a day that people say they'll remember. While some might be thinking about what's happened in gold today, I'm going to remember it because today is the first day of trading of our new company, Caldas Gold. Earlier this week, we completed the long-awaited RTO we'd announced last September. We've spun out our Marmato mining asset to Caldas. It's a TSXV listed company. And as I say here, the future of Marmato lies underground. What's shown in that box in the middle of the chart, which represents sort of the mountain of Marmato, is what we call Zona Baja. Zona Baja being the lower concession is where our existing mine is in the upper zone. That's where we're getting those 26,000 ounces right now. And what we're planning to do is as we announced in the PEA we released last October, that we're going to optimize the mine, something we'd not put our attention to over the last number of years, reduce dilution, increase production, and reduce its cash cost. We can do that with minimal capital investment. The capital investment's going to come in the deep zone, that area at the bottom of Zona Baja, where we've identified a porphyry-style mineralization. It'll take us about $269 million based on the PEA to develop it. It'll take us about 2.5 years to finish that, come on stream, as you can see by the chart at the bottom, in 2023, and give a substantial lift to the project, giving us a 19-year mine life as we look forward at Marmato, of which we get 16 years at the front end from the lower mine. 3 years later, we start the lower mine, and we'll have another 16 years. All in all, this project, based on the PEA, is expected to generate 2.2 million ounces of gold production at an all-in sustaining cost of $882. At $1,300 long-term gold was what we modeled it after. It's a 20% IRR, and 3 years after the deep starts up, it'll all be paid off, and it'll be free cash flowing back to shareholders after that. A very exciting project for us, and part of what really excites us is that as our exploration team continues to drill at depth, as we reported in a release on February 3rd, we're finding on the infill drilling that the grades are higher than the resource grade. Bodes very well for us when we get around to the PFS, which will be done by the end of June. So the last slide, why invest in Gran Colombia? We think the valuation opportunity continues to speak for itself. We do have a high quality producing asset base. We're free cash flow generating. We have a lot of reserve and resource expansion both in Segovia, but now with the launching of Marmato, we're going to be able to fund that and take advantage of it in this market.